Hey everybody, what's going on? My name is Jesse Anderson, and I'm going to teach you guys a little bit about what I know about candles and how I use them. This is going to be super basic. Basically, this is going to be the start of a series where I teach basically everything that I know, and um, there's going to be videos that have a ton of, you can watch hundreds of videos on stuff like candlesticks or support and resistance, but I'm just gonna make them, and I'm gonna say what really flipped the switch for me, what made me understand things, and hopefully that'll help you if you're struggling to really grasp a concept of anything. Hopefully, what I've learned helps you too. Yeah. So we'll start off. There's tons of different types of charts. We'll actually go through an example on TradingView, which, if you don't know what TradingView is, it is a chart software. Looks something like this. So I'll basically show you guys how to read a chart. But first, if we look at them, you can have several different types of charts. You can see these, the chart changes. So green obviously means that it's going up, red means it's going down. But you can do something as simple as a line chart. You can do bars. Some people call them ladders. You can do area. You can do baseline, which will basically just, if you're looking at the screen and move your up and down, um, it'll show you above the halfway point is green, below is red. I personally use candles. Some people use Heiken Ashi. There's tons of different types of ways to do it. I'll be going over just regular candlesticks today. But by the end of this video, I hope you guys learn something new. And yeah, so there's tons of different types of charts. I showed you bar chart, candles, hollow candles, line, area, baseline, Hakanashi, Renko, etc., etc. So why do I use candlesticks? Simply put, when I'm looking at a chart, they tell a story. Within seconds of looking at the chart, I can see by looking at a candlestick where price started and ended, the open and close, where price rejected, which would be a candle wick, which we'll go over here on the next slide or two, and if in that candle there were more buyers or sellers. And then, yeah, examples to follow. So this is going to be a little bit blurry. I just took this off of Google, but this is the basic anatomy of a candle. So you have an I'll go back. You have an open and a close. So on a green candle, it means price ended higher than it started. So the open candle is going to be right here. This shaded green area is going to be called the body. The open is the very bottom of the body for a green candle. The close is the top. And then you have these things that are wicks. So if price goes down to a certain level but rejects and shoots back up, that is going to be a wick because it's outside of the high or the open and the close. So some people call them shadows. I call them candle wicks. That's going to be maybe more. I would argue they're more important than the actual body of the candle because they really tell you the story about where exactly price rejected and why. So that's the anatomy of a green candle. Red candle is opposite. So say we started with this candle, we opened price down here, we closed up here. Well, a red candle, the open is flipped. So the open is up here and we closed lower, which is why it would be a red candle. So open, if the close is higher than the open, it's a green candle, and the space between the open and close is going to be the body wick, or the body, sorry, not the wick, the body. And same thing with the red candle, but opposite. You're going to be open and close. Everything in between open and close is going to be the body. Wick is going to be everything outside that body, and the close is going to be lower than the open on a red candle. So that should be just the anatomy. I don't know about you guys, I'm very visual, so we'll just go in straight into a chart. We'll just look at Tesla. So actually we'll look at SPY. Everybody knows about SPY. So every candle is going to be how the candle is made up is going to be determined by what time frame you're looking at. So 3 5-minute candles So if I draw, a highlighted box, a rectangle around 1, 2, 3 candles right here, that is going to be inside of one candle. You can't really see it, but that is going to be inside of one candle right here. It's snapping there, but so 3 5-minute candles obviously equals one 15-minute candle. Everybody has their own kind of system about what time frames they like to use to trade, but that'll be in another video. Just talking about scalping and swinging, but for the basics, what you need to know is that depending on what time frame you're in, one candle equals one period of that time frame. So if I'm in the 1-minute time frame, one candle is going to be one whole minute. So right here, this candle that I'm highlighting, you can see at the bottom my toolbar, is at 3:55. The next candle is going to be 3:56, and so on and so forth. Sometimes you will see thinly traded stocks, such as OTCs or things like Alta, where you could see price kind of jumps around sometimes. So there's a 152 candle, but then the next minute isn't a candle until 155. That sometimes happens. Generally, those aren't going to be tickers that I like to trade a lot because there's not a lot of volume, and that's why price kind of jumps. So if we look at SPY, today is the 28th of April, and I'll go on the 5-minute chart. It's something that I use pretty frequently. We can, if you remember the anatomy, a red candle, the open is higher than the close. Get my brush out. So here was where price opened, and here is where price closed. So between that period, price can go higher or lower, and that is going to be what's called a candle wick or an upper shadow, lower shadow. Everybody calls it something different. And so when we look at this wick up here, price did something like this. So price opened here, and then buyers tried to step in and push price up, up, up. And then sellers stepped in and said, nope, this is the last line. That's where I'm going to start. Sellers had more pressure. That's where they're going to start really offering more shares to buy. And so once that happened, price went down all the way down here. It hit this level. Buyers stepped in, said, nope, I have more buying power than you guys have selling power. And so they pushed price up just a little bit, and price closed here. So what does that tell me? Just by looking at this candlestick, I can say, okay, at this level right here, I did a white horizontal line. At this level right here, I expect some more price action to occur. I expect some more fight to be had at this level. And it's not necessarily at each candle wick, but if you look over here in this area, price accumulated here for 1, 2, 3, 4, 5 candles. It hit this level, around that level, 5 times before rejecting. So when price goes down and then back up, I expect price to have a little bit of fighting here to try to push its power up and through that level. And as we can see, price rejected this point, so price came up here, fought, tried to push back up, fought, tried to push back up, fought. Okay, so now price has to come down here to find more buyers. So price has to find more buyers in order to push the price through this selling pressure here. And so when they found buyers at this level, pushed price back up, and then what happened? At this candle, we closed right here at this level, we opened here, and we had enough buyers to push through. And then we have this other candle wick where there's more sellers. So when we broke this level, we came back here, we needed to catch some buyers. And so the candle wicks are telling me through those, through the wicks or the upper or lower shadows, who had more control. So we have 1, 2, 3, 4, 5, 6, 7, 8 candles that are green that closed higher than they started. And so that tells me that we have more buying pressure. And so because of that, once price breaks these levels where selling pressure was more prevalent than buying pressure, I would expect to switch my sentiment. So if I am playing SPY and SPY is going all the way down here, while it's still making lower lows, so price is going lower on each candle, I am going to be short biased or bearish. But as soon as price breaks this level where price rejected and the sellers are weakened and the buyers take control of the market sentiment, I'm now looking for buys. And as you can see, if you would have caught that level there, and that's without any indicators, if you would have caught that level there, you found the story through the candle wicks, those 5 candle wicks rejecting that one area. Within seconds, you saw that that price was heavily fought after, and so when price gets back there, you're very interested in what's going on. And so through the knowledge of candle wicks, you're able to see where price is going, what is going on in that time frame, and then where price could go based on certain candles. So there are tons of different candlestick patterns. I don't use many candlestick patterns. I mainly trade something called the strat, but alongside of my normal strategies, which we'll get into later in the series. But this is just a quick down and dirty video about candlesticks, and I'll give you one example of certain types of candlesticks that show a story. And so we did the example about finding this would be a support or resistance zone off of candlesticks, which will be the next video. But if I look at this candle alone, if this is the candle that just closed and I see this candle, it tells me a whole story based on that one candle. And so what this tells me, we opened price here at this level. We closed higher, so buyers had more control of that candle. But not only that, sellers tried to push volume, or push the price, sorry, not volume. Sellers tried to push the price down, but they were quickly rejected. Price hit this level and shot back up and closed higher than it started. So buyers had full control in that 5-minute candle. We're on the 5-minute chart up here. And so based on that knowledge, if I'm looking for a reversal, I'm going to see that buyers have more control here, so I'm looking to enter a buy position if I'm playing a reversal strategy. And my entry would be just above that candle, and further along in the videos when we get more fine-tuned into exactly what my strategy is, you'll see that I would take the trade, a long trade here at the break of this candle's high. And so after that, my stop loss would be below that candle there, right about there. And as you can see, we have the benefit of hindsight, but just by playing that candle right there, you would have had a 5 to 9 risk reward ratio. And so that is why knowing candlesticks, knowing how to read a chart is incredibly vital. And I'm not sure if my slides showed the high or low. They did. So the high and the low of the candle is going to be the very tip and the very tippy top and the very tippy bottom of those candle closes. So, or the candle in that time frame. So at the very top here where my mouse is hovering, you'll see that's the high. And that's going to be the same for a red candle. So it's just the anatomy of the candle. The high of the candle is the top, the low is the bottom. So hope that video helped, and if you have any questions, hit them in the comments section, and I'll try to find a link to maybe another video from somebody else who talks about candlestick patterns. If you're interested in that, or maybe an infographic, we'll see. Something will be in the description for you, but hope that helped.